Still on AFIS 2024, the First Bank of Nigeria PLC, despite its dominance at home in Nigeria, is looking at China and building relationship in Asia. The bank just hosted the first China-Africa Interbank Association forum in Abuja. Deputy Managing Director Ini Ebong spoke to Arise business correspondent Rotus Oddiri at AFIS 2024 in Casablanca, Morocco.
It is day 2 here in Casablanca, Morocco at the Africa Financial Industry Summit. We just saw a great panel with some high-level executives or a number of banks across the region. And we're talking to one of them right now, Mr. Ini Ebong, Deputy Managing Director over at First Bank. Great to see you, sir. One of the topics on the panel was about trade and expansion. And First Bank actually hosted the first China-Africa Interbank Forum in Abuja. I want to ask you your thoughts on the expansion of your bank across the African continent, what it means for your operations.
Thank you very much, Rotus. Yes, you're right. We hosted the China-Africa Interbank Association Forum about 2 weeks ago in Abuja. And I think very important because when you look at economic linkages between Nigeria, or indeed Africa and China, $280 odd billion worth of trade in the last year. It's certainly very important that financial institutions build those relationships. We need to move eastwards, right? We need to build deeper relationships with Chinese and other Asian banks so that we can underpin this economic activity, we can fuel further growth for the African continent. Now, as it relates to our expansion across Africa, as you know, First Bank is one of the largest banks in Nigeria. Our home market, we're dominant in terms of our spread and breadth across the nation. But we do see pools of opportunity across the African continent. Our area of focus is across West and Central Africa. There are a number of countries that we're looking to enter to expand what we do. It adds diversification. It gives us an opportunity to be part of the African growth story.
Fantastic. I do also want to ask you about regulation, which is what was talked about at the panel. How do you see the regulatory environment when trying to expand into other markets?
Well, as you know, you have many different countries, you have many different regulators. But I think what is important, look, financial services is a regulated industry, right? So we cannot escape the regulatory oversight. And we embrace that because we are a bank, all right? And we must conform to rules. That said, it is clear that different economies, different countries are at different stages of financial market evolution, and even in terms of their financial systems. So you would not expect the pace of regulation to be the same across board. Again, is that an impediment? Reality is, when you look at it globally, there are global standards these days. And we would expect that banks will just have to conform. We would expect that there's a bit more regulatory harmonization, such that, we operate within the same set of rules. So that different regulators aren't reinventing different things. But it's something we have to live with, and it's something we'll work with all our host regulators very closely, and we will just get by.
Back at home in Nigeria, you've got, of course, your 150 billion naira rights issue to raise capital. How are you assessing the recapitalization drive for the banks in order to get Nigeria to the $1 trillion plus economy, and what that means for the nation?
Well, the regulators pushed this agenda at the start of the year. From what we've seen, a lot of banks, some of our peers inclusive, have already gone to market. We are able to tap into the capital pools that exist in Nigeria and internationally to support our efforts. At First Bank, it is clear, our rights issue is going well. As you know, we are part of a holding company, and it's going well. We expect to raise the capital we need to fuel our expansion, both domestically and internationally.
One more question for you, sir. We're asking this to every executive. 2025, what's your outlook for Nigeria's economy? And maybe if you want to even throw in the wider African nation, and then with respect to how it impacts banking.
Well, I mean, What is clear is that we've taken some hard decisions that were necessary. When you look at FX reform, we look at normalization of monetary policy. Yes, they created some tough shocks, but they would help us reset our economy. I think Nigeria has a backdrop that, in my view, is positive. Whether we like it or not, Mr. Dangote's refinery has started. That will wean us off fuel importation. That will certainly have an impact, because when you think of the quantum of foreign exchange that we use to import fuel, we've liberalized fuel prices, so we've taken some fiscal steps that were necessary for the economy. Yes, painful, but if the government authorities, both the fiscal and the monetary side, stay the course, follow through, and consolidate on some of these painful steps that we made, then one would expect that the outlook should look better and brighter. And one can enter 2025 with a little bit more optimism that we get our economy on the path to sustainable, meaningful growth.